markets are looking ahead this week to central bank meeting minutes and the Jackson Hole Symposium for firmer clues on rate cuts. Currencies are already on their way though, the US dollar weakening sharply against the yen and the Aussie rising. Iron ore prices are slumping and gold is on the bounce. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ Head of Asia Research, Khoon maps out the future for Asian currencies after the unwind of the yen carry trade.
If the Fed is easing because the US is in recession or in danger of slipping into recession and there's a global crisis of some sort, that tends to see Asian currencies weaken because ultimately Asia is very dependent on exports for its growth.
But first, in 5 and 5 with ANZ. Global markets have started the week in a cautiously optimistic mood, ahead of minutes from the US Fed, the ECB and the RBA. And as markets look at comments coming out of the Jackson Hole Symposium for central bankers. At 4 a.m. Sydney-Melbourne time, the S&P 500 was up 0.56%, while US Treasury yields were down 1 to 3 basis points. ANZ economist Bansi Madhavani says this morning from London the direction provided this week will be important.
Many global central banks have started easing rates and the focus this week is on cues from the US Fed. So far, the Fed has signaled an easing bias. This week will set the tone and guide expectations about when that easing bias shifts to easing policy. Our view is that the Fed will begin cutting rates in September. The pace of the cuts will be controlled. In that sense, we expect the Fed will move in increments of 25 basis points unless labour market materially deteriorates.
The US dollar index was down 0.5%, with the Aussie up 0.91% at 67.26 US cents at 4 a.m. Sydney-Melbourne time, while the Kiwi was up 0.86% at 61.04 US cents. Number 2. The US dollar has weakened dramatically against the yen to a 7-month low of 145.2. That's down almost 3 big figures over the last 24 hours. ANZ's head of FX research, Marjabeen Zaman, says traders are looking ahead to Jackson Hole with a strengthening view that US interest rates will begin falling as Japanese interest rates are rising, narrowing the yield gap behind the carry trade. Traders are watching out for comments from Bank of Japan Governor Kazuo Aida, in particular from Jackson Hole.
We have seen yen strengthen a fair bit, and I think one of the key drivers is that Japanese 2-year yields are at 2-week highs as markets are looking ahead to Ueda's speech later this week, and I think the expectation is that he will have hawkish commentary coming out.
Number 3. Iron ore prices have finally capitulated almost 10% lower in the last week to a 2-year low of $97 a tonne, as traders gave up hope the Chinese government could stimulate steel demand back in the world's largest construction sector. Here's ANZ senior commodities strategist Daniel Hines.
The writing's been on the wall for some time now. I think the prices had been, in a sense, propped up by relatively optimistic sort of views around stimulus measures in China in particular. But the weight, I suppose, of the beleaguered property sector in China has finally come to bear. And I think, we're seeing the outcomes of that. Steel demand has clearly suffered as a consequence. And as we've sort of highlighted through the course of the year, officials there have been really reluctant to throw a large-scale sort of fiscal stimulus package at the market this time around.
Number 4. Thailand's GDP rose slightly faster than expected in the June quarter, 2.3% from a year ago. ANZ economist Crystal Tan says activity was supported by government spending growth turning positive again, as well as strength in goods exports.
The cyclical tailwinds probably have a bit further to run if we look at high-frequency data. The tourism sector looks like it's going to remain a key growth engine. The recovery there has continued to gain traction in the third quarter so far. As an example, average tourist arrivals from the 1st of July to 11th of August so far has reached almost 92% of 2019 levels. That's versus a 19% in the second quarter.
Number 5. The other big commodity price move over the last week has been gold. It surged to a fresh record high of over $2,500 US an ounce yesterday, thanks also to expectations of falling US interest rates. Given gold is a non-yielding asset and competes against other safe haven assets such as US Treasuries. Here's Daniel again.
The market has obviously been waiting for the Fed to instigate its rate cut cycle, and certainly data just recently continues to support that. Interestingly, when we look back at the last few rate cut cycles, in fact all the way back to 1990, on average gold has risen about 6% over the course of that cycle. So even though we're hitting all-time highs now, the prospect of further gains is still quite strong, considering that those interest rates rates are likely to come down over the course of the next 12 to 18 months.
Daniel Hines there. Now, in our bonus deep dive interview, ANZ Head of Asia Research, Khoon analyses how Asian currencies outside of China might fare as the US Federal Reserve kicks off its easing cycle after the unwind of the US dollar-yen carry trade.
Asian currencies actually did fare quite well because as the yen carry trade was unwinding, it led to a sharp appreciation in the Japanese yen. And the yen tends to have quite a strong correlation with Asian currencies generally. So as the yen strengthened, it actually put appreciation pressure on Asian currencies generally. The exception was the Indian rupee, which actually went the other way and weakened to historic lows against the US dollar. And the key reason why the rupee was outlier was because the rupee was part of this yen carry trade as well. Rupee had been high-yielding currency in Asia, and therefore the investors were quite keen to invest or go long in the Indian rupee to take advantage of high yields funded out from yen. So as the yen carry trade was unwinding, those long rupee positions were forced to be unwound and led to the weakness in the Indian rupee.
You've been doing some long-term analysis of how the Asian currencies ex-China have fared when the Fed is easing. What have you found? What seems to be the patterns?
Yeah, so we are approaching the Fed easing cycle, which is going to kick off in September, all things going according to plan. And conventional wisdom is that whenever the Fed cuts rates, that tends to be negative for the US dollar. And conversely, that suggests that Asian currencies should benefit during a Fed easing cycle. But when we look at the historical record, the performance overall is actually quite mixed. In around half of the Fed easing cycle that we've had since the late 1980s, Asian currencies actually only appreciated around half the time. I think what's key is the global backdrop at the time when the Fed starts to embark on an easing cycle. If the Fed is easing because the US is in recession or in danger of slipping into recession and there's a global crisis of some sort, that tends to see Asian currencies weaken because ultimately Asia is very dependent on exports for its growth, and if there's a US recession or a global crisis, Asian exports tend to suffer and that doesn't benefit their currency that much. Conversely, if the Fed were to ease at a time when there's no crisis or when Asian exports are still robust, then that's when Asian currencies tend to benefit quite well from the Fed easing. So as we approach this Fed easing cycle that's coming up, it looks like we could be on track for the latter. We are to view that the US is in the soft landing camp, and therefore that should lead to Asian currency appreciation as we see the Fed embark on their easing cycle this year.
Fingers crossed for that soft landing. Just wondering, though, whether the shift of some exports out of China and through parts of Asia to the United States have changed the dynamics at all and potentially made a soft landing even softer for Asia ex-China.
We've seen a huge shift in trade and investment flows in the last few years as this China diversification strategy by multinationals really accelerated. And that's no doubt helped some economies here, particularly Vietnam. Malaysia is also starting to benefit quite a lot from investments, and India. And that's also helped to strengthen those economies' exports as well. So in some respects, yes, those have been beneficiaries, which have seen their currencies supported as well. And as we approach this Fed easing, again, as long as the US economy continues to hold up, that should translate through into ongoing Asian currency strength. The big caveat, of course, is what kind of US trade policies we're going to face in 2025, depending on who wins the US presidential election in November. That's probably the biggest source of uncertainty for 2025, because ultimately the trade policies that the US pursues under whichever the new administration will be by then will be more influential than Fed policy by then.
Couldn't go there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, August the 20th. Catch you tomorrow with any clues on interest rates out of the RBA's August meeting minutes due later today. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.